All right, let's get into Tom Lee here.
Partner and head of research at Fundstrat Global Advisors, as well as a CNBC contributor. Tom, in recent appearances, I would say that your conviction hasn't necessarily been quite as strong as it had been in some of your other calls, where there's been a time where you said the inflation data will be so good that the S&P will be up 200 points in the next week, and it panned out, and it played right into what you were saying. The last time you were on, I think your basic thesis was that market's still solid through the end of the year, but in the meantime, there could be some volatility.
Last time you were on, literally Tom Lee goes on CNBC like every single week. Like, I'm not joking. Like, do I not react to a new Tom Lee video every single week on this channel? Like, pretty much every single week, I react to a new Tom Lee video. Sometimes it's twice a week. So, yeah.
Maybe even a pullback. Now I think you're saying it's been more stable than what you're expecting, and it has to do with liquidity and cash on the sidelines more than anything else.
Yes, that's right. You're right. We've kind of been sort of, I think, fooled by seasonality because we thought markets would be hesitant before, the elections, and it's October. But we've seen this market be incredibly resilient. So I've underestimated how strong this market's been. I think it really shows macro data is becoming less important, and it's now the fact that a lot of cash has been on the sidelines. For the last 2 years, investors expected a recession, or many thought when the curve uninverts, we got a recession. But at the end of the day, there's $6 trillion of cash on the sidelines, and October has turned out to be a great month.
We've seen it, evidence of what you're saying, and I know how closely you watch it. We've seen it on a daily basis over the last, I'd say, maybe month or so, where many days we're even down triple digits in the futures, only to end up 250 or 300 points by the end of the session. And with no backdrop of positive news, nothing to account for it, other than it seems like there's money on the sidelines that's coming in.
I mean, it feels like investors are underinvested in stocks. I think there's people who've dreaded 2024, thinking this is the year we slip into a recession, and instead, and we're seeing it with earnings, companies have been really resilient.
Yeah, we waited to retest the lows a couple of times in 2022 and 2023, and people weren't bullish at all. We didn't get great advances, and now it's almost unstoppable, and nothing seems to be able to knock it off a track, whether it's, I think the PPI and CPI were both a little hotter than people thought. The prospects for a Fed continued easing cycle are now open to some conjecture, I think, although most people say it's still going to happen, even though things are pretty solid in both the economy and the stock market.
Yeah, I think it makes sense for the Fed to be dovish just because inflation is still tracking, especially PCE, towards their 2% target. And now we have some concerns about the job market. So I think the Fed has to be supportive. And I think this election, which is becoming less of a coin toss, I think because it's been a coin toss, people have been sitting on their hands. I think these are reasons markets are starting to have conviction, even in front of an election event.
I think we've soft-pedaled it too. The swing states have even some of the swing states that looked like solidly in Harris's camp are now truly swing states or Trump's up in Michigan and Wisconsin, and betting and everything else. And if NBC goes from Trump up or from Harris up 5 to Trump and Harris tied, and then you do a full field and Trump is actually up in a full field thing. So I think you might be right. Bitcoin's at 65,000. You wouldn't say that the stock market's performing better because it's starting to look like it's less of a coin toss, would you?
I think markets like visibility. So if it looks like one candidate is now looking like to be the surprise winner, then markets can actually trade better before the election.
Wait, does it matter? You said markets like visibility. They have to like what they see on the other side of it, I would assume.
Yes. I'm probably just citing market history, but whether Trump or Harris wins, I think stocks do pretty well next year, sort of a post-election rally. But there are definitely differences in sectors and asset classes performance depending if Trump or Harris wins. But, Bitcoin, for instance, is something to watch if Trump looks like he's strengthening because Trump is running on a pro-Bitcoin platform.
All right. Now, you said something, we'll get off of that, the politics. You said that you agreed with almost the asymmetric risk now. And I still think it could go the other way. I mean, I think the labor market looks pretty solid given that last report, and that we're still, if PCE is 3%, we're still, it's got to go down another 33% to hit 2. And they swore they're not moving the goalposts. It's 2. It's not 2.5, Tom. It's 2.
Yes.
And what makes you think that that's in the car? Who knows with the Middle East and everything else? But oil's back to mid 70s and could go higher.
Yes.
I'm more worried about it. I don't know. They're more worried about the jobs picture than stubborn inflation.
I mean, you're actually right. Oil spikes can cause an inflation spike, and that would be a surprise. But if we look at what's been keeping inflation stubbornly high, it's been shelter, which in the latest inflation report finally is rolling over, and it's auto insurance, which is now just beginning to sunset. So in the second half, auto insurance becomes a tailwind. And then the question would be, are core goods going to stay under pressure to kind of bring overall inflation down? And it looks like core inflation, on goods, looks like it's going to remain soft. So I think inflation doesn't have the upside drivers, except for what you're saying, a commodity shock.
Okay, so Tom Lee maybe getting a little more constructive on the market, right? And I will tell you, man, this market's set up to go ridiculously bullish if we keep moving up through the end of this month, right? Then you get the election, and the guy wins that the market really wants that guy to win, right? Gosh, because we know so many people get bullish in general around the market November, December. And then if you have that supercharge, plus coming off of a great September, October, if you're talking about a situation that could just be an absolute melt-up into the beginning of 2025, that would be the melt-up situation, right? Would I bank on that? Not necessarily, but and you could ask me, where do I see the most opportunity if we actually get into a real melt-up, which we're not in a melt-up yet. We're in a great market. It's an uptrending market, but it's this, when I talk melt-up, I'm talking like real FOMO starts to come in the market and everybody starts talking about the market. We're not there yet. We could get there though. But what stocks are going to do the best in that environment? 100%. The Russell 2000. The Russell would just go ridiculous. If we get into some melt-up situation into the end of the year, oh, baby. Because people will look and they'll say, okay, where's the real biggest opportunities out there? They'll look at the NASDAQ at all-time highs. And then you look at the Russell today. The Russell's, roughly around the same value it was 4 years ago. So you look and you're like, okay, the Russell. And obviously that's many times what you see move the biggest. And so if there's a viewpoint that he's getting back in, right? And all of a sudden there starts to be this like FOMO in the market. The Russell, I think, is the one that's most well capitalized in terms of what could capitalize the most on this. I think the Russell could. And so that would be just ridiculous. And you would see the small caps move like nobody's business. I mean, it'd be ridiculous. But we'll see. We'll see how it all plays out, right? There's a lot of different things that could transpire between now and then. But that's a potential. And, just got to be kind of prepared for it, right? Now, it doesn't necessarily mean that 2025 could be a great year for the market because you could melt up, into even January, and then maybe the market flatlines for the whole year or even downtrends. Like, these are possibilities that you have to consider. But maybe the biggest gains are just kind of from, let's call it the time things get over there until, let's say, like end of January. Hey, I want to thank you so much for watching that clip. I hope you really enjoyed it. What I'm showing you in front of your face right now is 1000xstocks.com. This is such an important website and service to use if you want to research companies, if you want to understand companies on a high level, so you can hopefully get better results in the market. And we know as the years tick on, money compounds. It is so important you research companies, you compare companies, you're listening to conference calls, looking at SEC filings. all that's included into 1000xstocks.com. So to enjoy 1000xstocks.com and to apply for that service, you can go to the description area of this video, or you can go to 1000xstocks.com, whichever you prefer. Alrighty guys, so let's start going through this. First place, it's very important we start right here so you can begin to understand the story and how the ingredients all got to this place, okay? August 5th, it was drama day. That was the day where everybody was talking about Japan, the carry trade. Oh my gosh, if we had $1 for every time that was mentioned on that particular day, we'd all be billionaires. And it was drama, right? Market obviously sank massively. It was a dramatic day. Then everybody was expecting September and October to be bad months for the market. Why were they expecting that? Well, traditionally, September and October are bad months for the market many times. And additionally, if you look at how the market usually trends during an election cycle, specifically where both individuals are not in office, usually September and October are bad months for the stock market. So we had a drama day in August that freaked a lot of people out, caused a lot of people to sell. And then you had seasonality that a lot of people seen as the market's going to downtrend in September, October. It put a very interesting feeling into the market in general. I took this screenshot back on September 3rd. The morning of September 3rd, Tom Lee, one of the most, I would say, famous people, I say on TV, when it comes to the stock market, in his opinion, right? This video got 46,000 views in only 4 hours. After it was posted. Incredible, right? So he goes on to CNBC the morning of September 3rd. And this is a man that usually people would categorize him as a perma bull, meaning he's pretty much always bullish. It's always optimistic. It's always glass half full, right? And he went on and sounded pretty much bearish. He said investors need to be very cautious the next 8 weeks, right? And when Tom Lee, the guy that's seen as a perma bull, goes on to CNBC and says, hey, watch out, people start to take notice, and they actually kind of a little bit panic. And actually, if you look at the market on September 3rd, that morning, the market was actually down significantly. People got freaked out when he went on there and said, you need to be cautious the next 8 weeks. People said, oh my gosh, Tom Lee, bearish? What is going on here, right? Now, since September 3rd, right, the NASDAQ, and that was about 6 weeks ago now, the NASDAQ's up 6.5%. So that's a huge move. Remember, the S&P 500, you can generally think of going up 8%, 9% a year. So 6.5% just since September 3rd, 6 weeks ago for the NASDAQ is an incredible move in a very short amount of time. This shows you a few of the individual stock moves, because it's not just like the S&P 500 and the NASDAQ's moved up big and the Dow's moved up big. Look at Amazon stocks up 6+% since September 3rd. Meta stocks up over 14%. Nvidia stocks up 21%. SoFi stock is up 30, almost 35% since that time frame. And Palantir is up close to 40% since September 3rd, 6 weeks ago, right? Absolutely phenomenal moves for those sorts of stocks, right? Now, to take you back to August, that was very important to putting the ingredients on for what you needed for what's likely to transpire from here, okay? So check this out. This was from late July to early August. It was an absolute dump in the market. Check this out. The NASDAQ, if we go back to kind of mid-July, right, the NASDAQ's 18,500 plus, if not 18,600, right? And then over the next several weeks, the market drops all the way down on that August 5th day, right? And it dropped well over 2,000 points, almost 2,500 points, because we're around 18,500, 18,600 here. And next thing you know, the market's all the way down to 16,100 points here. So we had around roughly a 2,500 point drop in the NASDAQ. In a matter of weeks. It wasn't months, it was in a matter of weeks, right? And this is what I call the weak hands dump. So this was a lot of people that could get easily freaked out of the market, scared, the algo was also selling, and they just dumped out of stocks in mass, right? And that's how you just got that unbelievable selling pressure on the market in a very quick amount of time. This is also the people that I call it, sometimes the market's looking for reasons to sell. This happens every once in a while, especially if the market's done very well, the market's been pumping, people have been making a lot of money. So some people start to say, I'm ready to take some profits here. Like, just give me a reason to sell. Just give me a reason so I can sell. And then when the carry trade, Japanese carry trade came, all of a sudden there was enough reason to sell for people. Like, okay, this is a crash. It's all bad. Like, this is going to go bad, right? And people are just looking for that out. And so you get this aggressive selling pressure because you have the algo selling, then you got the individuals panic selling, right? You got the weak hand selling. And additionally, you got the people that have made money and are just looking for a reason to sell. Just give me a reason to sell blah, blah, blah stock. And they got their reason, right? And so you just saw a massive amount of selling pressure in a matter of a few weeks. Then market rallies back very hard. And then we have our next move down, the next ingredient. This was around a 1,200 point dump in the NASDAQ right here. NASDAQ was around 17,900, and now we're in about mid-August, right? A little past mid-August. And then the market dumped all the way into about September 3rd, September 4th right there, right? And the market lost, as far as the NASDAQ go, it lost 1,200 points. And the reason I'm showing you NASDAQ here, you could follow the S&P 500 and the Dow, and it'd be very similar. But the NASDAQ, in my opinion, is the most important index nowadays to the market. The Dow is still the most famous index. The S&P 500 is the one that matters the most for people's retirement portfolios. But the NASDAQ actually is the market that matters the most for the overall financial markets. And so the NASDAQ here dropped 1,200 points in a quick amount of time, once again, in a matter of weeks, right? But this was a different dump this time. This was a seasonality dump. This was all the people that were saying, September and October are going to be bad in the market. We need to get out. We need to sell now because we're going to be able to buy back in November at much cheaper prices than, it's at now. Now, people are in a weird situation because you were selling NASDAQ at 16,700, 16,800, 16,900, 17,000, 17,500, right? And right now, the NASDAQ's 18,200, almost 18,300. So there's a potential that when you go back to buy, like you were planning on going back to buy in November, you might have to buy at much steeper prices than where you were buying at previously, right? And so now you're in this like hope situation, like I hope the market goes down, please market go down, please market go down. And if that market doesn't go down in any significant way between now and when you're supposed to buy back at the beginning of November, what are you going to do? You're going to be in a bad situation, right? Seasonality. Now, additionally, we just had our first rate cuts for the first time in a long time, since like 2020, right? First time we had rate cuts. So we've now begun a rate cut cycle. Now, there was a lot of people that said, once once the Fed cuts those rates, get ready, stock market's crashing, right? Here's what you got to understand. If you look at 1 year rate of return after the first rate cut, more times than not, in recent times, the market's actually green a year later, not red. A lot of people are under the assumption that the Fed cuts rates, you're automatically going to be Red Dead Redemption over the next year. It's just not true. So you look at this one, January 2001 rate cut there, market was down about 13.5% 1 year later, right? So boom, there you go. There's your proof point. But then there was a November 2002 cut, market was up 14.5% a year later. If we look at the September 2007 rate cut, they cut rates, right? Market went down 20% over the next year. Then they took a pause for a while, and then they started cutting rates again October 2008. A year later, the market was 8% higher. Not lower, higher. July 2019 rate cut, year later, 10% higher. And probably would have been a lot higher if it wasn't for Rona, because then remember we had to deal with Rona and the comeback from Rona. So imagine how much the market probably would have been up if Rona never happened. But anyways, that's subject for another day, right? And then March 2020 rate cut, everybody thought for sure the market was just going to keep crashing. There's no way the market could come back. We got shutdowns going on and all this stuff. The market was 27% higher a year later, 27% higher, right? And so just because the Fed cuts rates does not mean you're guaranteed to have a stock market crash and it's going to be ugly, ugly, ugly. That can happen, right? As it did in 2007. But it doesn't mean every time it's happening. And to assume every single time the Fed cuts rates is a 2007 situation is also wrong. It could be, right? But to assume every single time it's 2007, no, it was a very freak amount of certain situations happen all simultaneously. It was a whole different setup. And the one thing you should be able to learn from studying economics over time, studying the markets over time, is no two times are alike. They might rhyme, they might be somewhat similar, they might be completely different, but they're never the same. Never the same. There's not one time period you can ever look back throughout history that it was the exact same, or even close to the exact same. The Great Depression was not the same as the Great Financial Crisis and the Great Recession, right? Which was not the same as the Rona shutdowns. which was a massive highest unemployment cycle we had seen since the Great Depression, right? None of those were same, and a lot of them times they weren't even very similar, even in those dramatic situations, right? Now, additionally, we look at money market funds. Think of this as kind of money on the sideline chilling right now, right? And look at this, $6.5 trillion roughly is chilling over there, right? Now, there's a belief that basically as rates come down, and this is probably a good assumption, as rates come down, there's going to be more and more of this money that's going to end up piling into the market that's going to put extensive buying pressure on stocks, right? And I will say, yeah, the more rates come down, the more it's not very attractive to have money sitting in treasuries or money just sitting in other instruments that are basically gaining you a few percent, right? The more the Fed moves down rates. And so for right now, it still makes sense to keep a good amount of money in money market funds. But as the Fed lowers in this cycle, let's say over the next 12 months, it's going to make more and more sense to essentially take that money and move it into the market, right? This is just what happens throughout time. This is just what happens. And when the Fed's raising rates, guess what happens? Money market funds go up substantially, as we watched play out here. The Fed starts raising rates like crazy, and everybody starts saying, I got to put my money in savings accounts, got to put my money in CDs, got to put my money in treasuries, right? Because, gosh, there's easy money to be made. And so look at this. We had a jump of, about roughly $1.5 trillion in a matter of 2 years. It's incredible. That's an incredible jump there. But this has likely topped, and you're going to likely slowly start to see money market fund money start to come into the stock market, which adds another level of buying pressure. And if you don't have any major reason for people to sell, right, gosh, that buying pressure can be very, very, very powerful. Now, that leads us into the election, because we are only 3 weeks away now, 3 weeks away from the election. Now, this is out of NBC News. They're calling it a dead heat between Trump and Harris in their new NBC poll. Here's my personal opinion. The elections are always won by the swing states, right? We know a certain amount of states are going to vote Democrat. There's a certain amount of states that are going to vote Republican. There's just no debating that, right? The only debate is where do the swing states go? If you had to put me on the hot seat and you said, Jeremy, who's winning what states here for the swing states? Here's what I believe, okay? I believe Trump will take Arizona. I believe he'll take Nevada. I think Harris is probably taking Georgia. I think North Carolina is probably taken by Trump. Pennsylvania is probably taken by Trump. And Michigan and Wisconsin are probably taken by Trump. So I wouldn't be surprised. My opinion now is that Trump's going to probably easily take the election. I could be wrong, and I really, that's fine. I could be wrong. That's just my opinion on just kind of looking at everything I look at, kind of gauging what populations are more incentivized to vote for this person, who's got more excitement around them, just a lot of different factors, and also looking at all the different poll numbers, which I try to look at the mainstream media poll numbers, and then additionally I look at some of the poll numbers that aren't so much mainstream media. I also look at the betting markets, how the stock market is thinking. And so overall, that's kind of my feeling in regards to that. And so, by the way, Trump doesn't need to win all those states for him to win the election. If he just wins a few of those, he's going to win the election. So that's also another factor to keep in mind. Now, in relation to that, right, because this matters significantly about what the stock market's about to do. If you think about traditionally, Democrats were known as big money spenders and raising taxes, right? That doesn't mean it's always true, but that's just the stereotype. If you want to stereotype Democrats, people think about them as spending on these big social programs, raising taxes, those sorts of things, right? Traditionally, Republicans, they think of Republicans as not big money spenders. They're like the conservative ones, right? Except for the military. They're always willing to spend crazy amounts of money on the military, right? And they're kind of seen as the tax cutters, right? Now, Trump is a little different. He's a little different, right? He's not really a traditional Republican, and that's what a lot of people, I don't think, quite understand. Trump likes to spend money, and he likes to cut taxes, which is seen as the holy grail for the stock market. You're telling me you're going to spend? You're telling me you're going to cut taxes on top of that? Let's go, baby. That's Trump. If you look at Trump's first term in office, guess what he did? He spent like crazy, and he cut taxes. Heck, even when they were doing the stimulus checks, Trump was pushing for bigger and bigger stimulus checks, right? That was not a thing that Republicans would have ever agreed to in the past, right? Stimulus checks and then going for the bigger stimulus checks, that was never traditional Republicans. Trump's different. He likes to spend and he likes to cut taxes. So it matters significantly to what happens to the market after the election. Here's the thing. If Trump wins, right, which I think there's a higher probability he wins than he doesn't win now at this point in time, investors are going to feel major FOMO, and they're going to be crazy hyped. because they remember back to the Trump days and kind of the Trump market and all those sorts of feelings and whatnot, right? We remember that. And so I tell you, there's a lot of investors that definitely want Trump in office. There's no doubt about it. Like, who's the pick of Wall Street? The pick of Wall Street, really, it's Trump for this particular election. Not for every election, it's Republican, but for this one, there's no question. If I had to ask the majority of CEOs and the majority of Wall Street, far majority, wouldn't even be close. Who do they want for their businesses? It's going to be Trump. And so that would definitely be a lot of FOMO and hype if he ends up winning, right? Now, when it comes to Michigan consumer sentiment, that in terms of that survey, which they've been doing for many decades, consumer confidence was booming under Trump, right? It was absolutely booming. There's no debating that. It obviously crashed once Rona hit, but that wasn't obviously his fault. And then basically ever since Rona, it's been horrible, including in 2022, we had consumer sentiment that reached levels that honestly was just pretty sad and pathetic numbers. Like, that was, I think, the lowest in the history of that survey, which goes back all the way to like the 1950s. I believe that was the lowest consumer sentiment's ever been, which is crazy when you think about Rona, when you think about the great financial crisis and everything. Like, it was so bad, right? And so when consumer sentiment starts to come back, an overall feeling good about the economy starts to come back, and then an overall good feeling about the market starts to come back. Retail starts to get engaged again, because a lot of retail hasn't really participated the way you would have thought they would have participated over the last number of years, because it just felt like, oh, Biden's in office, I don't feel confident in him, inflation's so high, I don't have money to invest in the market. There's just a lot of negative feelings in regards to that, right? If Trump wins, I think you'll likely start to see consumer confidence come back in quite a major way in 2025 and beyond. By the way, I think consumer confidence would also start to go up under Harris, believe it or not, in 2025 as well. Because I think regardless, inflation's not going to slice and dice people next year, so it doesn't matter who wins, consumer confidence is going up. But I think it will go up more rapidly under Trump for the reasons obviously we just spoke about. Now, that leads us into this, right? This ingredient, which this is one of the most hated bull markets ever. One of the most hated bull markets ever. In my 16 years of the market, I've never seen such a hated bull market. Never have I seen such a hated bull market. People talk so much trash about this bull market. Oh, it's only the top 7 stocks. Oh, it's only the AI stocks. Oh, it's just AI hype. Oh, it's just this. It's just that, right? There's no breadth in this market. There's no, where are the dividends at? Where are the value stocks at? Where's the Russell at, right? And so this is one of the most hated bull markets ever, but it really comes back to this. If you have horrible consumer sentiment, right, and you have a stock market booming, people don't like that. If you have a booming stock market with booming consumer confidence, people love that, because it's like the masses are feeling great, the stock market's feeling great, everybody's like, let's go, baby, like everybody's excited. That's not what we've had. We've had a consumer that's felt like crap for years now, and we have a stock market that's never felt better. That's why this is such a hated bull market, right? But if all of a sudden this consumer confidence comes back, where's the market going higher? Next thing you know, oh my gosh, like people are feeling jacked up. They're feeling very, very excited.